Thomas, thanks very much for joining us. Renewable energy has been a significant theme, and looking at renewable energy storage, power to X, and particularly hydrogen. How do you see this as an impact opportunity for institutional investors?
The last 15 years, renewable energy has become a very broad infrastructure-related investment opportunity for institutional investors. In the future, it's still very important to invest in renewables, but very important is we have to look also for the CO2 emissions. That means if we go along the next couple of decades, it's not only necessary to produce green electrons. We have to be aware of that in other sectors, we have to reduce CO2 emissions as well. And here we do believe that the market is now right and ready for going to the next step of energy transition. That means we have to invest as institutional investors on the GP and on the LP side into technologies which will come now into the market and which they are there already in order to achieve these goals for Europe and hopefully also potentially worldwide. So I'm pretty concerned if we don't do it, let's say it this way, because institutional investors are playing a major role in this kind of transferring and allocating institutional money into this market. So yes, it's definitely a market for us.
And you mentioned the role of emerging technologies. Now, that's obviously a fast-paced environment. So I suppose, where do you see this heading in 2022 and beyond?
With regard to the technologies, yes, there is a part of emerging technologies available, but I think that is also the opportunity to invest into very decent projects where we do not have emergent technologies. We have stable technologies. They are in the market now for a couple of years, a couple of decades already. If, for example, if you look for hydrogen, the point is more to scale up and to reduce the price. So you can compare it with the solar farms 15 years back. So a solar module invested 15 years back is still sometimes it's still running and producing electricity. And here we have the same situation. The scale up of solar farms and wind farms was the most important stuff to go into this renewable electricity boom. And I think in the power to X technologies, we have the same situation. The ramp up that we use the technologies and increase the volume and decrease the costs. This is the most important stuff. And I do not see that we cannot invest because of emerging technologies. What we have the problem is we cannot invest because of the pricing of the technologies, but not of the technologies at all. If there are emerging technologies for sure, then private equity and seed investors are coming in, venture capitalists. They have a different way of penetrating the equity markets. But for institutional investors and going for more infrastructure, even development side, the technology is there, what we can invest in.
And you mentioned there the institutional investment side, Thomas. Do you think this is going to potentially open up a new sector for institutional real estate impact funds? Or is this really more about, diversification for existing fund strategies?
It could be both. I think that typical infrastructure investors who tried to penetrate the whole infrastructure market in order to diversify their portfolio normally went into, let's call it, into streets, into trains, into housing, social housing, everything with regard to infrastructure. Here it's different because we're gonna penetrate the market from renewables and into, let's call it, the clean tech technologies, reducing CO2 emissions. This is important. And this means we use a part of the infrastructure market, we call it sustainable infrastructure, and fulfill here with our investment strategy a huge opportunity also for our clients, because all of our products having full ESG and fully impact awareness in the possibility to find the right projects. This means it's a prolongation of the typical investment strategy of renewables, going now the next step in invest into clean tech oriented technologies used for power to X. And power to X is the major word here. It's a technology what uses green electrons. So the starting point for me, it's always green electricity. If we're gonna transform this electricity into another energy vector in order to reduce CO2, and this is a major part for impacting everything with regard to climate goals. And here, institutional investors can play a major role.
Really interesting to see the kind of major role that institutional investors can play in this area. Thanks very much for joining us, Thomas.
Excellent. Thank you, Richard.